Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading to bring you the market recap video for Monday, March 28, 2016. And let's jump right back in. Let's jump right into the report here. One thing that I personally like to do during my reports is make sure that we get a technical read on all market conditions, kind of look forward to the future of this week as well in terms of preparation. The first thing we want to look at here is on the S&P 500. You know, last week when I gave the market recap video, it was right into this range right here, and I saw a little bit of slowing momentum. It's already very overextended to the top side, and my thought last week was we were going to come down a little bit, and that's kind of where I still expect the market to come. It's kind of just in fade mode. You know, it's like it's constantly in a wait and see mode. Wait for the next economic report. Wait for the next news event. One of the biggest concerns I have right now, though, is look at the dismal volume. Not even a million contracts traded on the S&P 500 today. If you look at the spiders itself, you're looking at, and I thought last week's volume was low, and the week before volume was low, but this goes back to the end of December type low volume. We had about 61 million shares traded on the S&P 500 today. The 20-day average, is right around 108 million shares. There is no conviction behind this market, either up or down right now. Nobody believes anything in the market. Nobody's really selling outside of transportations today, and you start seeing transportation get sold off pretty heavily today. But outside of that, nobody's really taken a key position one way or the other on the S&P 500. And again, it's like we're data. You know, even today, I mean, look at what happened today. No shares traded on the market. It was like $5 billion $5 billion exchange hands. Oh, excuse me, 5 billion shares exchanged hands today, and the average volume is about 8 billion. That's a 40% drop off in activity, and that's not very normal. I don't want to say it's completely unprecedented because we had it in December, but in December we're talking about Christmas, and we're talking about, you know, the traders being, you know, at Martha's Vineyard and in the Hamptons and down in the Caribbean. They're certainly not trading. They're enjoying the last 2 weeks with their family on vacation. So outside of that, seeing a market today coming back from the prolonged holiday, it's a little surprising to see so few volume in the market today. And you're talking about today's low volume today when you were dealing with a Capitol shooting, Capitol gunfire there in Washington D.C. You're dealing with a bomb threat in New York Times this today as well. You're dealing with the FBI admitting that they were investigating a you know, basically a virus, and you have GDP last week that came in underneath 2%. Even though we did see a slight uptick in GDP, it's really the real GDP is somewhere around 0.6. And so, despite all of that, where's the movement? I mean, it's almost like there was no announcements today. There was no activity today. There was nothing that transpired today, and there was just no volume. I mean, I could get it if I saw a doji with lots of volume. I would understand that to a certain extent. But where we're looking at a doji with no volume on a day where there is so much information coming out into the market, and that's a little concerning to me as a whole. I do see a little bit of slowing momentum right here. It's very difficult to get in and be the buyer, as we've seen an extended run up already. A lot of times before you make a decision to get back into something, or you're looking at your investment, since a lot of investments are market correlated, we need to wait till it kind of retraces back down, and that's kind of my expectation here, is that we will see a retracement back down. Now, what could impact that, obviously, we did get some we even got some negative economic data that we didn't even talk about in the core PCE price index, which is a very important inflationary index for the Fed. That came in at 0.1%. Personal spending 0.1%. That was a reduction over the forecast of 0.2 on both of those. And so when you're looking at that, you got to ask yourself is, where's the volume? Where's the traders? Where's the movement? And again, I'm not saying up or down here because I've seen markets go up on negative days. I've seen markets go down on positive days. Old bad news is good news, so to speak, and whatnot. But where's the movement in terms of the volume? Nobody is doing anything. I mean, are they waiting for tomorrow with Chairman Yellen giving her speech in front of Congress? Maybe a little bit. Are they looking at it later this week with non-farm unemployment rate and payroll changes? Maybe. But I'm the liquidity in these movements, the volume on these movements is just something that we are just not used to, and that's something to keep an eye on in the future. The dollar index, looking at the dollar index, we talked about how the dollar was at its potential average yield last week. We expected it to pop back up in price, and that's exactly what has transpired on the dollar index, hitting right where we said it would last week, coming into 96, pushing on the way back down. My expectation is for the dollar to go down this week in the market. So maybe on the the S&P 500 neutral to slightly bearish is kind of my projection. On the dollar, I'm looking at a slightly bearish bias on this. This is just your prototypical retracement, push it back down. If you look at on the Fibonacci retracement level, here you got, if you draw that Fibonacci retracement, you're right smack dab right into the 50% retracement with the downward movement in price. Love the doji candle here, followed by the engulfing bearish candle on the right hand side. That should look to trigger to the downside from here. Trigger for me is somewhere underneath the low of the day. Crude oil doing the things that crude oil does: stop hunt, stop hunt, stop hunt, stop hunt some more, hunt some more stop losses, and then end on a doji. That's crude oil these days. One of the most volatile tradable instruments that you can look at is crude oil. As you can see, just kind of random movements on the daily charts. I do have more of a bearish bias on this in the short term than a bullish bias. It has ran from 26 all the way to 42, 26 to 42 without a retracement, ladies and gentlemen. That is insane. That is just something historically crude does not do. But now that we're seeing the low prices, we can expect a little bit more of the volatility to continue. Crude's highly correlated with the market right now as well, so I expect crude in the market to go where it wants to go. Silver, slightly bullish bias. This might be a buying opportunity above 15 for me. Below 15, maybe add insurance to any type of investments. On the VIX creep drops right north of 15 here. That's nothing to be too concerned about. It's right, volatility is right where it needs to be. We're selling call options and whatnot, the same way we always have. Now, in terms of the news of the day, had a couple companies come out with some negative news today. First of all, NBL, this is Noble Energy, warned against delayed in orders, whatnot. This in the energy sector, and as you can see, down 8% or 2.65% for you investors in Noble Energy. And VRX just getting absolutely butchered yet again and again and again and again, down yet another 7% today. It doesn't look like it because you see this big movement and you're like, oh, but what about that's just a small movement? I think in any capacity, this is a big deal for VRX, Valiant Pharmaceuticals. There's been a war on them for a little bit between some billionaire investors out there, but in my estimation, I do not see this changing in this short time, and I'm very concerned about VRX viability in the long term, but yet again down another 7% today. Think about this for a second, ladies and gentlemen. The market just a year ago was at 200, and this wasn't even a year ago, this was about 10 months ago, was at 263. It is currently $28.86. How would you feel about that? Well, I would feel pretty bad if I was an investor in VRX. Well, this is Matt Justice for Tackle Train, bringing you the market recap video for the week of March 28th, Monday, March 28th. Looking at the economic calendar, ladies and gentlemen, you got Fed Chairman Darth Vader tomorrow giving a speech in front of Congress, and we'll see what she has to say. I highly doubt it's anything that will spook any interest, especially after the GDP comments, GDP report from last last week. We have the unemployment rate coming out later on this week. You also have two consumer confidence reports, the consumer confidence report tomorrow, as well as the revised University of Michigan Consumer Sentiment Report, and that is on Friday as well. So big economic week. Technically, I think we're overextended on oil and the S&P 500. Look for a little bit of a slight downward movement in those two indexes, unless some economic report comes out that suggests otherwise. And I think the trade of the week might be on the dollar to the downside. Nice little technical setup on the dollar index. Hopefully, you enjoyed the market recap video. If you did, don't hesitate to go like it on YouTube. Give us a nice little thumbs up on YouTube. So if you enjoy the videos we put out there, ladies and gentlemen, take that one last step, just that one last fraction of a second, and hit that up some to show the coaches over there at Tackle Train that you like what they're putting out there, and it's helping you control your financial future. This is Matt Justice, Coach Matt. I'm out.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.